Well, hello everybody. It is September 6th. This is the review for the 4th. And if we take a look at what has happened in these markets, what we finally saw after what has been an extended period of time of saying, hey, you got to be careful, is we finally saw these markets come back. Now, on the week, it was down 6% plus. We end up down roughly 3% across the indexes. 6% plus was top to bottom, so you got up there Monday, Tuesday, hit the high on Tuesday, I believe it was, get a big spike down Thursday, Friday, and a bounce back on Friday afternoon. So 6% plus, high to low. Is that a big deal? Well, when this market has moved up as much as it has, and you can see here, even with the 3% off of it, it was up 36, almost 40% when it actually took the dive. 6% is nothing. And you got to keep that in perspective, right? It's a start, but it doesn't really mean that much. It certainly hasn't changed the outlook longer term, but it could go lower, and we're going to look at that first. Odds are that this thing's going to set up some sort of a range and eventually try and trade higher, but there certainly is the possibility that with these kind of crazy gains, mostly built on what would be a hard-pressed argument that is fundamentally valid, we could see much more losses. So we got to protect against that. We have to be aware of that. That doesn't mean you abandon. That means that you have to be more prudent about what you do. And that's kind of what I've been talking about the last 2 or 3 weeks, showing you all the divergences and saying, hey, this isn't going to go on forever. At some point, you're going to get a slap across the wrist. The slap across the wrist, matter of fact, usually doesn't stop them the first time, and that's why you typically see these things that have great momentum continue back up. So here's that 6% retrace. It doesn't mean much, right? Especially to tech. If you look at tech, semiconductors up 20, technology itself up 29, discretionary, a lot of that's Amazon and so forth. These are huge gains. Even biotech's up 7, and then outside of the tech sectors, the builders, which the bonds have that the Fed's been doing is pressured those higher. The only weakness you really have, huge weakness, has been, of course, energy and the financials. Financials can't make any money with the suppression of the yield curve like they have it. So, do we worry? I don't think you make huge concerns here. There are some things to be concerned about depending on what happens next. And so that's always the case. So let's look at that. So can we go lower? Well, you can always go lower. What's the odds of us going lower? Look at this retrace, came in, wanted to test a swing point low and try to break it. You got an MTTF that's extended on the daily time frame. You really need a reset of these, and we're probably going to get one. Now, whether it happens Monday or Tuesday and we come down here and we get the reset, or maybe we bounce first and then come down and get the reset, my expectation is that at some point here before we go off running to new highs, we're going to get a reset. And that reset is going to be healthy. That's going to be a good thing. Now, if it does reset these, there's 2 swing point lows, it could get a little spike down into this retest regen on the swing point high, which is down around the 3265, 3275 area. Keep that in mind as we move to the weekly. That 3265, if you notice, is just about where that breakdown bar's high is. And so if we push back into that, I expect this area right in here is the key spot that's going to get bought, especially if we come down fairly fast. So if sometime this week or next we come straight on back down, I expect you're going to see that area get bought, especially if we just come straight on back down. In other words, we don't even make a bounce. We make a little bounce that doesn't hold and we come back down. If we break that daily swing point low, we're probably going to test and potentially break this retest regen on the swing point high. Now, that's not the end of the world. That just tells you that what has been up is probably sideways. And that would say a range. And that range, I would think, would be this area here that we just talked about. So that's kind of the context of what I think should happen. How it folds out, we'll have to see because this market has been so bullish. But certainly, that's probably the more likely case of what happens over the next 2 to 3 weeks. Okay? Oh, another piece of this is that retest regen itself came in with too much volume. So you hit high volume on the breakout bar comparatively and on the high. And again, that argues that you'll probably get a retest. If we look at something else we've been watching, that divergence, right, where we saw, and we talked about this last week, where we saw divergence where those stocks making, or those stocks whose trend were bullish were decreasing while price was still increasing. We knew that that was a warning sign, along with some of the other warning signs that we were seeing. And so now the question is like, when will this turn and this head back up? Now, the last time this happened, and I'm going to compare to June, and we'll look at June here in a little bit later in the daily chart. The last time this happened, you saw the same sort of thing. This retraces the S&P, and the green bar, which is the bullish trends, came almost all the way down to this buy area. Conversely, the red tried to work its way up, but didn't get up that far. That told you it was still pretty bullish. You know, unlike a case here where the red comes way up and the green comes way down, here the red gets halfway, the green comes down below it, and then you get the reversal. The time period that it took was about a month. If we come over to this and we do about the same amount, a month, we're already 2 to 3 weeks into it. So if this were to continue down, and this continues down into this area and then reverses, right, that may take, you know, it doesn't have to be 4 weeks. It can be 5, 6, 7 weeks. But anyway, that period is what you'd like to see is you'd like to see this green come on down and then start to reverse and then cross back over with the red as price decreases, right, on the S&P. And so you get something that's congruent, and then when this turns, we see the S&P start to turn with it in terms of price. So that's the sort of thing that you'd look for on this trend chart. And another way to look at it is just looking at the S&P top. When the price tops on the S&P in terms of duration, the top was right here. You can see there again about 3 weeks. And if that's the case, then we just topped 1 week or 2 days ago. Well, actually about a week because it was Tuesday. So, you know, you could get a couple of weeks of pressure on the S&P 500. And that, of course, would allow this to come down and then spike back up. So either way you look at it, this is kind of suggesting that, yeah, there's probably a little bit more downside to go. The issue, if I see an issue, and so now that's the case where the market does kind of what I expect it to do. What if it doesn't? What if this thing just runs right back to the top, right? We just had this huge run higher, and then we got a fast retrace. All these divergences are still out there, right? They haven't corrected, or most of them are still out there. What you really want to see is this market go back and forth, right? You want to see it do that consolidation type stuff before trying to take off again. If it doesn't, right? If this just starts to take off again, so you get this fast retrace and then boom, you're up to new highs and you keep pushing. That's probably the worst scenario you could get. Because if that happens, right, my guess is what's going to happen is you're going to get a crash off the top. That's going to be a blow off top. And so what you want to see is you want to see this thing, you know, calm down, come back up, maybe get almost to the high and then come back down again, maybe another low, you know, some sort of consolidation. You maybe even make a new high nominally and then fall back down, but you don't want to see it just lurch and keep running. So this is really the three scenarios: the consolidation stuff that I expect, the continuation right back up, and of course I didn't talk about the other cases where we just dive and keep diving, and of course that's a bad case too. That would say this bull move maybe is over, and so you know what you're looking for is the consolidation, and we'll have to see if that starts to develop. And that would mean that we could, you know, still get lower lows than we saw Friday. That would not be uncommon, especially with this kind of a move. But we would expect those buyers to show up at the top of that breakdown bar. Here's an example. I mentioned this Thursday night's missive that comes out Friday morning, or that you see Friday morning. I went back and said, look at the June case, right? Here's the May case where we did the spike up, extensive run straight up. And then we got the fast pullback. That's just like we just saw. We got a hard retrace real quick. And then we got the 3 bars with lower lows. And then we come back up, fill the gap almost, right? And consolidate here for a good period of time. Bounce consolidation. And then we made that run that we just experienced. That's the sort of thing you want to see, right? You want to see this kind of action. You want to see this up and down consolidation just underneath the highs. And in this particular case, right, it gets over, it comes back, does a retest, and then regens higher. And that was when we got the big spike up, this last one. This is what you want to see play out. What's the bottom line, right? At this particular moment, there's really nothing bad. We just got a reset. Should get a reset, finally got the resets, what you need. The market needed it. It got way ahead of itself. The fast selling saw the buyers coming aggressively on day 2. Now this doesn't surprise me. It's not particularly good. You'd like to see, them wallow down on the lows for a while. But this market's so bullish right now, right? This doesn't surprise me to see an aggressive buy. What you want to see, though, is you want to see it go back up and roll back over and come test again, right, to set up the consolidation. You got to expect that, right? That's what you should expect. You should expect this. So you get the fast, hard, gap down spike, second day, test under to close back. Now you will get a little bit more of a bounce and then come back. Maybe new lows, maybe close to the new lows, something to where you get a consolidation. You should expect some sort of volatility as a result of that. What you don't want is an extreme up or down. You don't want to see, we don't want to see these 2 bars end up being a 3rd bar that closes at the lows, right? And then continuation to the downside. That would be ugly. Another thing you don't want to see that I've already talked about extensively is you don't want to see it go the other way. You don't want to see the market come back and say, you know what? We can take this market and we can push it even higher. That's not what you want to see either. Remember, there's a big chance of some more downside, right? We've got this, the order book is not that deep. And so, there's a big chance, well, I shouldn't say downside. There's a big chance of either side. In other words, big spike up or big spike down. And the reason for it, and I'm looking at the futures contract, this is a graph I showed you, I think, last week. It hasn't changed that much. What you don't want to see is you don't want to see a huge spike either way, because that type of volatility either way is going to exacerbate itself, right? That tells me, and it should tell you, is you really don't want excessive risk, right? To the upside especially. I wouldn't take a huge position to the downside either unless I was doing it with some options. The more likely case here is that this market is going to consolidate, but it could, because this is not a deep book anymore, right? These contracts that are out there are not deep at all. You could see a huge spike either way, and you have to protect against that. You can't take excessive risk at this point. You can't buy, hold, and forget. You're going to get slammed. Whether it's now or whether it's later, it's going to happen at some point. If you've noticed in the portfolio, if you watch the portfolio on the site, I've been taking the stops and I've been bringing them up. We got stopped out of a couple of them, 3 of them this week. That's okay, right? Made profits on the ones we stopped out on or broke even. And that's not a bad thing, right? We've had a big run. Got to protect them. And those that are still working, XLB and some others, just leave them, right? Keep managing them. At some point when this market, if it does what we want, if it consolidates and then sets up to go higher, we'll start putting them on again. But we need to see that. Weekly prognostications finally got the worst case. It's been a long time. If I look at next week, my expectation is we're going to come down and test whether we make a new low or not. I'm not sure, but I expect we'll get a bounce out of it and start that consolidation. If we do take off and run back to the highs, I'd be a little bit more concerned, especially if we close way up here somewhere. Worst case, you go down, you break these swing point lows, and you come into the swing point high. I think there's a decent chance of either one of these because this market is so wound up. This is what should happen. But, you know, if I had to put odds, I'd say, you know, 30, 30, and 40 or something, right? I think this is a case where this market could do whatever. And so let me reemphasize one more time. Do not take excessive risk at this point. You're going to get burned potentially if you do. Okay? That's it for this week. Have yourself a great one. Stay safe. I'll see you next time.